Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that everyone had a great weekend. The Dow closed lower on Friday of last week, down 74.73 points and down 86.71 points week over week. The S&P 500 closed lower on Friday of last week, down 1.52 points, but up 26.08 points week over week. NASDAQ closed higher on Friday of last week, up by 32.34 points and up by 233.02 points week over week. In overnight trading, Dow futures traded lower and are expected to open down this morning 5 points. Oil prices fell on Friday after a weaker than expected U.S. jobs report, which indicated a patchy economic recovery that could mean slower fuel demand during the resurgent pandemic. WTI for October delivery closed down 70 cents a barrel to settle at $69.29 a barrel on Friday of last week, but up 50 cents a barrel week over week. U.S. commercial crude inventories decreased by 7.2 million barrels. U.S. crude oil inventories are 6% below the 5-year average for this time of year. Total motor gasoline inventories increased by 1.3 million barrels week over week and are 2% below the 5-year average for this time of year. Distilled fuel inventories decreased by 1.7 million barrels week over week and are 9% below the 5-year average for this time of year. Propane and propylene inventories increased by 500,000 barrels week over week and are 20% below the 5-year average for this time of year. Oil is lower in overnight trading and WTI is poised to open at $69.02, down 27 cents per barrel from Friday's close. Total North American rail volumes were down 1% year over year in week 34, resulting in quarter-to-date volumes that are up 1.3% in year over year volume, or year-to-date volumes that are up 9.6% year over year. 4 of 11 of AR's major traffic categories posted year-over-year decreases, with the largest coming from intermodal, which was down 4.6%, and grain, which was down 24.4%. The largest increase came from coal, which was up 13.2%, and metallic ores and metals that was up 24.3%. North American rig count is down by 6 rigs week over week. The U.S. rig count was down by 11 rigs week over week and up by 241 rigs year over year. The U.S. currently has 497 active rigs. Canada's rig count was up by 5 rigs week over week and up by 100 rigs year over year. And Canada's overall rig count is 152 active rigs. Overall, year over year, we're up 341 rigs collectively. International rig count was just released and we are up 26 rigs month over month and up 30 rigs year over year. International rig count overall is 777 active rigs. A few things that we're keeping an eye on: the fallout of domestic energy infrastructure after the passing of Hurricane Ida. Hurricane Ida was the worst storm since Katrina and knocked out an estimated 94% of offshore Gulf oil production, as well as power to 1 million homes across Louisiana and Mississippi. WTI crude prices jumped 10% on Monday of last week, and at the end of a volatile trading week, settled at $69.29 a barrel. It has been difficult for companies to get an exact handle of overall damage, but final numbers are going to be north of 50 billion commercial industrial combined. From a 30,000 foot level, here's what we know. U.S. is going to loan ExxonMobil 1.5 million barrels of crude oil from the SBR. The U.S. government is going to lend 300,000 barrels of crude oil from the SBR to Placid Refining. Electricity is still out in many areas and expected to be down for weeks. Repairs are underway on Louisiana's loop system, which suspended deliveries ahead of Hurricane Ida. It seems to us that damage to the Gulf's refinery and petrochemical infrastructure has been minimal, and we are starting most things up again in the most environmentally friendly way possible. Buses are picking up people in New Orleans to get them to safety so they can experience basic human needs. At the end of the day, market prices have not been as dramatic as one might have expected. COVID, coupled with the world being currently well supplied, has kept markets in check. Stay tuned to PFL for up-to-the-minute updates. We are watching this one real close. The reading of PFL's rail report today is an absolute must. Not only do we go into detail in items discussed in today's podcast, but summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum imports and export numbers, dive into the latest U.S. employment situation, talk about what's going on in Alberta, and there's a lot to talk about, folks. The latest on Enbridge Line 3, STB's rejection of CN's voting trust, consumer confidence numbers, and consumer spending. You can also read our weekly positive report and look at all our fancy graphs. PSL have been extremely active in storage, return on lease, sublease, mobile rail repair and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or troubleshoot and give us a call at 239-390-2885. Well, folks, I'm about to hop on a plane to go to Chicago and attend this year's NARS conference. As you're going there, please give me a call. My cell, 239-405-3365, and hope everyone has a great, safe week, and we will see you here next Monday. Thank you, folks.